This video data is as of August 5th, Monday. Howdy, swings. As we expected on Friday, there was a brief effort to bounce back from the losses today. Even though there was a lot of fear in the market, Apple faced some issues, and tensions in the Middle East are reaching a peak. Despite this, the market's drop over the weekend was significant. When will this intense fear calm down, and when can we expect the next rally? Let's take a look at Fullhapce daily swing market forecast. Swing trader's friend, Fullhapce Intelligence presents today's Wall Street market forecast for August 5th. Daily market move. The stock market dropped overall. However, it's worth noting that while the market volatility index went up by 65%, the Japan stock market actually increased by 10%. S&P 500, 5,186.33, minus 3% down. Dow Jones, 38,703.27, minus 2.60% down. Nasdaq, 16,200.08, minus 3.43% down. VIX Index, 38.57, 64.9% up. Nikkei 225 Index, 34,884.35, 10.89% up. Daily sector performance. The stock market fell overall, with most sectors seeing declines. Long-term bonds and gold performed well during this tough period. None of the major industry sectors saw significant improvements. On the other hand, while many sectors faced widespread selling, technology, small companies, consumer goods, and financial services experienced the largest declines. The reasons: stocks have been experiencing a lot of selling recently. There was a brief bounce back in the morning when some stocks, like those in the semiconductor sector. This decline is due to a mix of worries about the economy and changes in investment strategies. The efforts to adjust after the market overreacted was weakened because of the lack of news since Friday. Investors are waiting for news. Things to consider. Recent market fluctuations might be more about short-term trading factors rather than underlying economic problems. The services ISM report for July was a positive sign, coming after several less favorable economic updates. Chicago Fed President Goolsbee has assured that the economy is not in a recession and mentioned steps to address any potential slowdown. Berkshire Hathaway's investment in Apple is still significant. Financial conditions are improving, with rates and the value of the USD falling. Market forecast for daily swings. The fact that the market tried to bounce back suggests that the worst of the fear might be over. Even though the market continued to drop before it opened, we believe that such a significant drop without a recession could actually reduce market ups and downs in the coming days, making it a good time to buy. On Tuesday, we might see some gains in the market by the end of the day. If that happens, it could be the start of a full recovery and possibly the beginning of a new rally. While there might be a possibility of a double dip scenario during the recovery, we think this is unlikely. It might be smart to hedge a bit for the possibility of another dip just in case. We think the market's potential has been full, and the strong resistance today suggests that a recovery and rally could happen within a few days. Once things stabilize, investment rotation strategies might still be worth considering, given broader economic trends. This forecast is backed by the following reasons. The current stock market drop seems more severe than what the underlying economic situation might suggest. The economy is slowing down but not falling apart, and global monetary policies are becoming more supportive. During the second quarter earnings season, companies didn't have perfect results, but many still exceeded profit expectations by focusing on cost control and improving profit margins. There are also fewer significant events on the horizon. Devil's advocate. If the stock market continues to fall instead of rebounding, it can be an opportunity for bullish investors to buy stocks at a low price. Here are some reasons why this could happen. Some market experts say the near-term outlook is poor because of historically weak August earnings, a high stock price without much value support, and no big news to change things. Also, Warren Buffett's company has a lot of cash on hand. His recent moves to reduce its stake in Apple and concerns about Nvidia, Blackwell, and Google raised pessimism about tech stocks. Also, there is uncertainty about how Iran will respond to recent events. While the opposition scenario has a point, we don't think it's likely. We've already had a huge market decline without a recession in August. Warren Buffett might change his investment strategy. Generally, geopolitical issues are not a big deal unless they lead to actual war. Regardless, viewers might want to be careful about the concerns raised by the opposing side. Conclusion: in the absence of a recession, a drop of this magnitude may be an overreaction, and we expect the S&P 500 to bounce back quickly to the 5,300 level. The market might move sideways there for a few days to decide which direction to go, which could lead to a rally. If we see a non-negligible bullish move tomorrow, we'll have a better idea of where the market is headed. You may want to consider some level of hedging to prepare for a possible double dip scenario. Also, from our perspective, the market is approaching the late stage. Even though the stock market has dropped recently, prices are still quite high. So, this might not be the best time to make big investments. Thank you for watching. Fullhapce Intelligence, the best investment partner for swing traders.